All right, let's stay on this topic and think a bit more about what it means for market structure, where we go from here in terms of regulation, how short sellers think about events like this. Dan David joins us now. He's the founder over at Wolfpack Research. And Dan, I'm just curious, as someone who likes to play on the short side of the market, how you've looked at the last couple weeks of Andrew Left getting chased out of Dodge on this thing, and the role that the narrative around shorts that has kind of developed as a result of this.
Well, I think there's a lot of confusion in the market about what a short seller is, the difference between a long short fund and possibly a short activist. And I really don't think the Reddit rebellion or army cares. I think what they saw, and what really doesn't get described, is that there are some very sophisticated people on that chat board. And they saw a setup with GameStop that showed, hey, look, there's really only 4 million shares we need to push around. It shows 70 million shares in the float, but between what insiders own and passive investments who aren't going to sell, they're in fact the ones loaning out the shares, right? And when they loan out those shares, short seller sells it to the market, creates a synthetic share. That's how you get to the 140%. And we're seeing that contract as that happens right now, right? And the stock's going down. But when you have a situation where you can really just have to push around 4 million shares, it's quite a different thing. As this thing opens up and there's 10, 20, 30, 40 million shares that are kind of free trading, maybe not locked up in passive or with insiders, they're not going to be able to do that. So that's what happened.
And I guess, Dan, this also gets to a question about the way the market has changed as a result of passive flows, which, I think for the average consumer are a positive thing. But the dynamic you're kind of outlining is that liquidity doesn't really exist in the way that it seems to exist, even in pretty big names. I mean, GameStop wasn't a penny stock. It's still a couple billion market cap. And the shares that are actually able to trade in large names still don't amount to all that much.
Yeah, I mean, look, you look at GameStop, and it was a speculative bet. I mean, at $20, it still is, right? It's brick and mortar, and it's not doing great as a healthy business unless they completely morph themselves and Hail Mary. So you've got to ask yourself. I'm asking myself, why are Vanguard, Fidelity, BlackRock, all of these passive institutions taking up 70% of the shares in GameStop before all of this started? And really, it's because of the liquidity that we're throwing at the market. I mean, $5 trillion just this last year, with maybe another $2 trillion on the way. I mean, putting this in some perspective, Miles, I mean, taking dollar for dollar stacked on top of each other, $7 trillion will take you to the moon and back physically. So what does money mean anymore when you're throwing that kind of liquidity at the market? These passive investments have to invest in everything. They are invested in massive frauds that I see out there today, some that have been called out this year, and they're still going up because money has to be thrown at the market. And it's not going to be put in the bank, because at a cost of living of 2%, and you maybe get 1% at the bank, you're losing 1%. So the government has set it up so the only place to put our money is the stock market. That's where it's going. What's very dangerous about these passive investment vehicles is, you're right, they don't sell until they do. And when they do, that is a very, very serious situation. And I'm not sure how we're going to put a stop to it. Well, I am sure. That's what we do.
Dan, who do you think is selling GameStop this morning, and what do you think the trigger point was?
Well, the short interest coming down is definitely part of the trigger point. And you have to understand that many of these passive investment vehicles are kind of like a Robinhood platform, right? They're free. If you are in this passive investment, it's free, but you have to know that we make money lending shares. So being in GameStop for that reason made a lot of sense to these free passive investments, free to the end user, because they made enormous fees on GameStop, right? The borrow rate was huge. And they get in these tightly held stocks for that reason. And as they start to unwind, that's going to be the reason this thing comes down, because there's just more in there in the float, and there's not enough money in that Reddit room to start pushing around a stock like that. And I heard somebody say before that, like, look, if you're in this at 15 or 20 bucks, you're still really happy at 150 where it's sitting here today. I don't know. I mean, I think a lot of people that are whatever they're in it for, and they see it at 450 and now it's down to 150, they're like, I missed it. I better get out now. Well, I still get a very good profit. And I think that's part of the momentum. Momentum up, momentum down.
Hey, I just finally wanted to ask you, Miles mentioned Andrew Left a few minutes ago, who is a well-known short seller, definitely not a mainstream Wall Street guy, right? But he said, I'm not going to be doing short selling research anymore. What kind of mail are you getting? I should say email. What kind of email, what kind of comments are you getting? What is it like? What's your mindset right now as an activist short seller?
Well, I mean, as an activist short seller, where, and the distinction being that we come out publicly and we talk about what we're shorting, I'm usually shorting something that's a fraud. And we've always gotten threats and online, mail. It's really ratcheted up this past week. I've had no position in GameStop, long or short, have not been in it at all. And I got threatened every day last week. And I mean, literally, that's just for my family. So not even talking about other people sending stuff in. It's pretty awful out there. I would ask this, that if anybody's going to follow through on that, please do it before I finish shoveling my driveway, not after, because this is ridiculous.
All right, well, Dan, we'll let you get out there or at least start the process of thinking about digging out down there in the Philly metro area. I know they got hit pretty hard as we did up here. Dan David of Wolfpack Research. Dan, always great to get your thoughts. Thanks so much for joining the show this morning. I know we'll talk soon.
Thanks, Miles. Good to be back.